So so let's start. Right. So let's try if we can cover as many topics as possible today. So currently I'm sharing my screen. Just give me a second. Hope the screen is visible, and hope I'm audible to everyone. So so these are the I'm sorry, yeah. So these are the elements that we are going to cover today. So let's go a little faster. So because we are having 1.5 hour, I'll try to cover as many strategies as possible today. So it could be 3-point trend line, which I'm going to show it now. We'll take an prospective. One is the already existing example, which has already taken, where we have already taken the trade, and there is one more thing which is going one is a prospective trade as well, which we are going to take it. So that's I have checked in the morning. Just give me a second. There is one. What's that? Adani Enterprises. Okay, this is the prospective. So we'll check this also. So these are the examples which I kept it ready for you. So let's get into it first. And before everything, I want to tell you one thing. It's like when we are looking into technicals, any technical, it's not it's not a Bhagavad Gita or Bible or Quran, which actually the things will not go out of that. It's not like that. They actually, it's just of it has the most that's just it just shows the maximum probability. It's only the highest probability thing that you can actually go along with. And so based on the statistics, say example, if someone is actually having a 72, one person should be having 72 a heartbeat of 72 times per minute. So does it mean that 70 someone who is having 70 times or 60 times is not healthy? It's not actually. It is not healthy. He might be healthy too, but only thing is he's not according to the standards. That's what someone is having a temperature of it's 99.4, or it's like a standard temperature. When someone say that, no, is it mandated that one always should be having? No, it's only actually it's on from the previous number of years. It's a standard that someone has taken some statistics. So this is what a standard is. Similarly, it could be BPs. Earlier it is 120/80, but actually it is slowly changing now. Slowly things are getting towards higher BP. So it's all statistics show what generally should happen, but it can happen otherwise as well, right? So don't take the real meaning of that's why anyone who is actually trading on the technical indicators, they'll always have a stop loss in place. So trading without stop loss, then be prepared to lose your money. We are not going to make any good definitely any good money in the markets. And if we are actually being educated and slowly, novice like us, actually slowly getting educated into technical indicators, slowly even the mutual fund companies or FAs or DAs, they're definitely smarter than us, because they are operating with the algos. So if you have to think beyond computers, and if you have to fool the computers, it's not every time possible. So stop losses could be possible. So that is all. So you have to take and be lucky that stop loss, you are going to freeze the loss. You are the only person, trader is the only person who knows the loss before he even takes the trades. Trading is the only business on this globe where you exactly know what loss you are going to incur if you go wrong, right? So yeah, taking all this into consideration, so let's go ahead now. Actually, so I'll take the let's take the little confusing one first, or because we'll be fresh. So let's take the confusing one first. So yesterday Sun Pharma has given a wonderful breakout. right? And Sun Pharma, how to get that type of trades? You know, it's almost like from 480 rupees, it has spiked up to 5,000 rupees change. So I request everyone to put yourself on mutes, please. Hello. Yeah, yeah, I think, yeah, oh, no, not yet. 1 second, otherwise I'll help myself. Yeah, fine. Okay, I think, yeah. Fine then. So now let's take this Heikenashi, these things first. Now let me open the.
Hi Ramna, Abhishek here.
Hi, brother. Hi. Yeah, I have just started, and we are just about to start the first strategy. Okay. Yeah.
Okay, brother. Okay.
Yeah.
Thank you.
Yeah. Pleasure. So now let's take the Sun Pharma thing into picture. So Sun Pharma. So someone has to know what exactly Heikenashi candles do. So what is Heikenashi candles do? These are the candles which actually will show the regular candles. What you're seeing, these are the candles which will show what is the high, what is the low, what is and what is the open and what is the close. And except this, there is absolutely anything more than this. But they are really eye catchy, and you'll be able to identify the charts really far easier than what you identify on the regular line charts or bar charts. Now on the other, OHLC charts. So than anything of that sort, you will be able to identify the exact, what is the open price, what is the closing price, and what is the high and what is the low. Right? If I see this candle, so let's take a single candle. It's I know it's very basic, but if you have to understand Heikenashi, then you have to understand this a little better. So now if you see this, so when I take this candle, the single candle, then the one, because it is a red candle, so the top, the main body top will be the open price, and the main body low would be the closing price, and the wicks here would be the would be the high and the low of that specific time period. Now what is Heikenashi candles? So now let's have the same, so let's pop it out and let's have one more. So let me change these. Go to display and select Heikenashi. So now you will see, here generally you'll be able to identify the exact trend right in the beginning itself. As soon as a real trend is started, you'll be able to identify the real trend then and there itself. So now if you see it here, so you have to understand what Heikenashi now. So now let's take a candle here, right? So this is a candle. This has wick upwards and downwards. In Heikenashi, whatever candle which is having a upper and the lower candle, both those are dojis. Be it a bigger candle, be it a smaller candle, it doesn't really matter. It is a doji. Doji means it's like an indecisive nature. The movement of that is completely indecisive. So now coming back to then what is the decisive thing? Wherever the actual candle starts without having any wick, and that's where you will be able to identify the real trend. How the system knows that whether it is a real trend or not? Because Heikenashi is just an average. It is just an average. It takes the average of the complete 15 minutes movement and it starts its candle. Now let's take this, because this is the place where the trend has started. Now let us see the open. The green is nothing but the open. So here, when the candle has opened here, this is the average price of the previous 15 minutes, because this is 15 minutes chart. exactly, you can see this is the opening average and this is the closing average, and after this candle has started, it has gone down, it has gone up. But here, after this candle has started, the average of the previous 15 minutes candle has not been broken at least once in the complete 15 minutes, which means it will indicate the clear trend in the very first place. Now that's the reason you are able to drive it from right from the beginning, from here, from almost like 675 till 685. You can see the price here. Do you think that on Sun Pharma, after the trend has clearly started, 475 till 470 485, do you think that we have a network problem connection? Network problem, who's that? I'm sorry, am I audible, guys, or someone hello, am I audible, mates? Can someone confirm? Hello, brother Abhishek, Bharat. Oh my goodness. Hello.
If it is not broken,
Okay,
it means it's
okay,
going up,
wonderful,
and then
wonderful.
we'll ask
Okay, okay, yeah, fine, thank you. So now, let me just carry on. So now, yeah. So if the next for the past 15 minutes, if the average, this is the opening average, exactly. If you see, this opening point is exactly in the midpoint of these averages. So the opening bar is an average of the past 15 minutes average. Now, and then again it has moved up, and then comes the the next bar. This is again the average, exactly the midpoint of the previous 15 minutes average is formed here. So again the average has started up. So now, so even this, once the direction is formed, did you notice what is the movement in the stock? It's 10% movement, not 10%, maybe, I guess, I think it's 1% movement. 1% movement in a stock in just 1 2 3 50 in 1 hour. So here, if you see 475 rupees, it has started its actual clean up movement, and it has ended its actual movement somewhere till 485. So almost like 10 rupees of movement here, right? So the trend, so Heiken candles, this is the beauty in the Heiken candles, it along with the open and closing prices, and these wicks are actually the real price movement in that 15 minutes. This is what the real price movement, only it doesn't give you the regular open and regular close of that 15 minutes, but it only gives you the average opening and average closing of that 15 minutes, and the wicks are nothing but the real movement, right? Now, so this is how the Heiken candles will form. And now on this, you simply bring in one more minute. So if you simply try to bring in the Bollinger bands, you try to bring in the Bollinger band, and you also try to bring in an average, right? Just give me a second, I'll try to bring in average as well. Average, sorry, exponential, moving average.
Brother, moving average.
Yeah, correct. Yeah, moving average, and it's only 2 moving average, right? It's only 2. The period is only 2, and it's exponential moving average. Now this is the place, and this, just a Heiken candle will not be able to give you the right picture. Just a Heiken, it doesn't completely give you a right picture. So what we generally do is, we also use this average point, and where exactly the place it has given the movement, right? Wherever the 2 exponential moving average breaks this Bollinger band, and gives an up movement. In the second candle it gives, in the second candle, because this is a 2 average, so that's when it gives the moving average, right? So when this happens, this is where you have to keep your script in the what is that, watch list. This is where it comes into the watch list. Now, as soon as, just because it has moved up, would it be sufficient? Actually no. Just because it has moved up, again this is not qualified. It has to have a continuous, stagnantness, right, almost for one day. Say example, see this, it should almost be a straight line nature. So if you see it here, let me just show. Yeah, it's almost, it's traveling in a complete stagnant nature from last how many days? It's been the divisions here, what you're seeing, the division what you're seeing here, it's almost like, here, from this is the 7th date, 7th date, right? It's on 7th of June, this is of 6th of June. So from almost like 3 days, Sun Pharma is completely on a stagnant nature. So just because it has moved up, you can't take a decision that it has actually moved up, and you can't take a call then. But see it here, of all these stagnantness gone, it has given an up movement here, and after it has given the up movement, wait, don't take the position right away. This candle, wherever you got the alert of crossing of this being crossed, there you'll be that stock will be selected as your watch list stock. That is just your watch list stock. And after that, this candle, whatever the breakout candle, that should be closed, and that has to be crossed. That's when it qualifies. 502, you can see it here, right? Your entry price would have been the 502. According to this strategy, your entry price would have been 502. Okay, I'll tell you how to catch the pre things also. If you wanted to be in the trade with a less more risk appetite, can actually take the trade a little beyond before this also. But let me just complete this part. Someone who wants to be conservative, someone who wants to be only safe, then definitely this is where someone has to take the trade, right? So if once it crosses the 503, then you will be part of it. It has gone till almost like 532 or 533, right? So, and that also, where you should actually exit, it is again up to your risk appetite. Because once this, generally when you start the trade, the beginning of this candle, the beginning of the Heiken candle's trend will be your stop loss. Actually, that will be your stop loss, and the trend beginning will be your stop loss. Now, once it moves up, wherever it forms actually a doji, you wait. It simply, in Heiken, generally after it gives this such a movement, and when the stock is completely stagnant for 3 complete days, and when it has given such a movement, and where you are actually seeing some volumes coming in, 1.1 million stocks are coming in, right? Generally it will not come down, because Heiken itself is a positive. It's average, it has broken the Bollinger band in the second candle, that's a positive, and then the next candle has broken its high again. So it's a very clean indication that the stock is going to run, right? That's when and you can actually wait until the doji forms, and if you wanted to be conservative, then you can actually book your profits here, or wait until if this is the complete run, wait until the 50% of it is broken. That actually, if you wanted to make more profits, then you should be ready to make more losses also. So it's not loss exactly, but actually if you have to, if you are waiting for more, then you should be able to be ready until that the 50% of that complete run is broken. So even if it comes down, it will actually pick up somewhere, and it goes up. but this is actually a very clean trend where actually it has taken up and it has moved up again. So now, so this is one strategy where you can actually find, and one more along. This is again an aggressive trade. This is cleanly aggressive trade. So I recommend, not everyone who is, the people who are having lower risk appetite, please don't try to get into this at all, because but anyway, this is also a good a strategy, but still, someone who is having a lesser risk appetite, please don't do it. Now this is already anyway stagnant. All the rule remains the same, all the rules remains the same, but here, after it has given the first breakout 488, if you have delayed until you get the right direction, you have waited till 502 rupees, right? 502, and here this is the first breakout. It's 480 rupees, so 488 rupees, or somewhere around that. So almost like 14 rupees, which means for the stock like Sun Pharma, which you have already achieved 14,000 by this time. So if you are an aggressive trader, this is an indicator. This is ADX, where ADX is an indicator which cleanly says the trend. It only indicates the trend. It's a trend calculator where the black line indicates the average trend point. Okay, the average, it's an average trend point, where the green line indicates the positive, whether it is a positive trend, and the red line indicates whether it is a negative trend. So if the red line is on top of this green line, do not take positions even if it has given the breakout. Do not take the position. But here, it's, see this Heiken candle has given you the confirmation, and then what is this? Heiken has given you the confirmation, and then Bollinger band with Heiken average to 2 DMA has given you the confirmation. Again, it's a positive, and then the green is on top of this black. This is again a positive trend. So these three will give you some good indication of positive trend. Then what should be the stop? There should be a stop loss, right? At any point you should always be having a stop. So below this average, right? Below this average, you're having these dojis, right? You're having these dojis. You're having these averages. Sorry, you're having these clean trends, and you're having these Bollinger bands. Sorry, what is this? Dojis, and it shouldn't close below this dojis. Never in its previous previous movement. Subsequent movements, it should not hit below this dojis. That's what, see it here. Even in the worst condition, when the bottom has broken here, you can see it here, it didn't go below that, right? And even the trend also didn't change. Even the trend here, ADX is the signal. That's the trend indicator. So this doji is not broken, and this ADX green, DX, actually this is DX positive and this is DX negative, and this is ADX line, right? And again, if some people who wanted to be in this also, someone who wanted to be conservative, again, see it here, there is a value, right? When you're actually standing here, when you're actually putting it here, you're having a value. It should definitely be above 20. This green should be above 20, right? That is again, there should be no doubt in that green line should be above the red line, and it should be 20. And having all these, you take the position, wait, and you can actually easily go long. And here also it gave the trend, but see it here. Here also it has given a trend. You would have taken the trade somewhere around 675, and you would have driven it to for 475 to 478, 485. But still, this is not a good signal, because this is just getting a crossover. just getting a crossover. Let's not take this into and also even the 2 DMA didn't cross this Bollinger Band. It is not showing that momentum. So remember, mates, I did many mistakes, many mistakes. Like, I keep waiting. I know that 470 is a beautiful, excellent price. 477 for Sun Pharma is an excellent price. So I have and see this here, 6 million stocks in 215 minutes, which means in 30 minutes it has traded more than almost like 13 million stocks in this. So this itself. So what I used to do, I simply take the trade here. I used to take the trade here and see what has happened. This is all just gimmicks of the big players. It has taken the price down to 470. The person who has taken the trade at 480, if he has seen that, for a very, the person with lesser risk appetite or the lesser capital would have been completely frightened by this. Just he would have taken this wrong position. But here, if you have taken this after you got the signal, you have taken that signal exactly at the same position what you have taken it 3 days back. It's in the 31st of, see this, what is the date here? March 31st. Sorry, May 31st. You have taken the trade after 8 days and still the price at the same point. So do not worry, do not jump into the trades, do not go into losses. That's where actually it should be very clear. So we should not give the market a chance to win over us. Fine, that's fine if we can't win over it, but it shouldn't win over us too. So that's what, forget about the confusion. So that confusion should completely be removed, right? This is one strategy. It's one of the proved best strategy, which where you can identify the momentum, trend, everything. Trend will be identified based on the Heiken candles, right? That and you have taken the confirmation from ADX regarding the trend. You have taken the confirmation from the ADX. The 2 DMA has crossed its actually Bollinger Band, which indicates the momentum of the stock, right? So this is where you can actually take the trade. This is one such strategy, right? And similarly, everything applies even for a shorting candidate. So now, what are the things? Let's just take the sum up everything. At least 1.5 day, or good if it is 2 days. At least 1.5 day, the line should almost be very stable, very almost like a straight line. It should almost be like a straight line. It should not go like ups and downs and like this. So the line which I am talking about is this 2 DMA. This 2 DMA should be almost like a straight line. Okay, almost like a straight line. And now that is the first point. The second point, Heiken candle should show a clear trend. Third point, this 2 DMA should have crossed the Bollinger Bands, upper band or a lower band when you are trying to say a short. Okay, and the best supporter, the oscillator, would be the ADX indicator, right? The ADX. That should be, the green should be on top if you're going long, the red should be on top if you're going short, right? So this is what, this is about Sun Pharma, and this is about the Heiken candle strategy, right? So now, how many of you have doubts in this? You can go ahead and ask. Any doubts, mates? By the way, am I audible?
Yes, brother, you are audible.
Okay. Yeah.
Yeah. So I have one question. Like, do we have any role to play with RSI here?
Actually, brother, it's yes. In this trap, but generally it is not needed. After you have taken the trend indicator, after you have taken this, definitely RSI is not necessary. ADX would suffice the purpose. But RSI, I need for I need this for the later for the later examples, so I just kept it on the screen. And yes, I also review that, and it's always good. And someone, if you see, remember this, everyone, friends. Half knowledge is definitely dangerous than having no knowledge. If you don't have knowledge, you won't even start. You're safe. If not profitable, if not anything, you're at least safe. When we are having half knowledge, we will jump in for the trade and we will lose. Half knowledge, that's very dangerous. So anywhere you see in the YouTube, you will only get half knowledge. Now MF companies or whatever it is, the people who are, it's not the best traders maybe, but actually the market people will feed us with half information only, because they will encourage you to get into the markets and they will pull money from us. So this is what half knowledge, that's what the half knowledge brings. That gives you a wrong confidence. That will definitely give you a wrong confidence, which will pull you in. Now what I'm going to say, why I'm telling this is, RSI, people used to tell me that RSI below 20 is good, RSI below 40 is really good. It's like 40 or 30 are actually good. Now how come it is good? Now that's what I never used to understand that. RSI is just a relatively, it just understands the strength. It is just an index which is calculating its relative strengths with its past 14 periods of movement, right? It's only so, along with that, if it is showing a trend which is going down, it keeps going down, it keeps on going down. So that doesn't help you at all. When is the RSI good? For a trader, you should not take a long trade in the given period. If it is in the 15 minutes chart, you should not take the trade if the RSI is below 45. If the RSI is below 45, you should not take a trade. Be 20, whatever it is, let it go. Let it go. Maybe even if it is 20, maybe it will show a technical bounce back. It will show a technical bounce back because it is oversold. Because RSI is saying, because this script has got into oversold position, so then maybe then there will be a little bounce back because of short covering or something like that. But anything below 45 is unhealthy. You shouldn't actually get into it. Now see it here. We thought of taking the trade here, correct? According to us, we thought of taking the trade here, and exactly at this point, see the RSI. It's 75. It's 75. It's more than 70. Have you seen this? This is more than 70. Did the script fall? No, it didn't. It's overbought position. If above 80 is, they say it as overbought. Did it fall? It has gone to overbought region. Did it fall? At this point, it has started raising up. RSI, trying to understand RSI is not that, what we read in the books, what you see in YouTube. You should actually try to experience it. Then only you'll be able to understand that. Anything below 40 till 30, between 45 to 30, it's actually unhealthy. Try taking a long trade above 50. Healthy, wonderful, right? You should take that trade, and anything below that 45 and all, you can take the short trades, right? This is for extra confirmation. You can all it's good if you always keep that. I generally follow RSI as well. I believe in that, so I keep it, right? This is one strategy. So now,
brother,
yeah,
as you said, that we if anything above 45 RSI, so it is healthy, right?
yeah.
So
Anything
see
below 45 is unhealthy. Healthy means above 50, brother. Above 50 is only healthy, is what
50.
I feel. Yeah, I feel.
Okay, brother.
I feel.
So
Yeah.
Yeah, so I have one doubt here. As you can see on this 8th of June, when the trade started going up, this RSI is saying that the trade is overbought. Now, do we need to have any concern with this, or we just need to ignore this RSI signal that it is being overbought, so it may fall?
Brother, actually, yeah, for a trader, or even as an investor as well, we should drive the trend. It's like how far it has told here, it has told it is overbought even above 80. It has gone above 80 also. You can see this region, but from here you see it has kept going. Reason, because we are on a 15 minutes candle. We are on a 15 minutes candle. You might be seeing it as overbought, but if I actually try to get into a hourly candle, see it exactly at that point, it is not, it is below 70.
Uh-huh,
if
yeah.
if you get into daily
There's the
candle,
magic.
yeah, if you get into daily candle, it is completely under 50. It's
Correct.
even under
Yes.
50.
Okay.
So it's all, so we are on the 15, that's why it is actually showing. So but anything above 55, at it just says comparing its past 14 periods relative strength, it is stronger now. It just indicates the current strength of that script, comparing its past 14 periods. That's it, right? So now, so at times I feel 80 is also not that unhealthy, unless until there is a serious Fibonacci ratio is going to hit that stock, or serious supply zone is going to hit that stock. Till then, you need not worry. You really need not worry, even if it is 80 also, unless until a Fibonacci ratio
Okay.
is going to hit, unless until a serious supply zone is going to hit, you really need not worry, right? Okay, brother. And now,
All
let
good. Thank you.
yeah, pleasure, brother, pleasure is mine. And now, let's take, so we have completed this one, and let's take the next interesting thing. It's Wolfe Wave. So this is one excellent wave, easy, it's not excellent, I have to say easy. It takes apart from Elliott wave. People say, few people will contradict on this statement, because there is absolutely no comparison between Elliott waves, because it goes on a wave count. Elliott wave will go on a wave count, and where Wolfe Wave is not completely based on the wave count. It doesn't take any of the previous movements of the waves into consideration. It right. So now, it only considers based on the structure of that wave. It considers whether that wave is a Wolfe wave, sorry, whether that wave is a bearish Wolfe wave or a bullish Wolfe wave. And Wolfe Wave also has its support from its Fibonacci ratios too. So now let's not get into the complete correlation between the Fibonacci's and Wolfe Wave. Let's understand the technique here now, and why it is behaving that way also. Now, paint 1 second. So now if I see here, so I'm having a, so let's take the Wolfe Wave, bullish Wolfe Wave. Let me show that bullish Wolfe Wave. So this, it has gone up like this, and then again it has from here it has fallen till it has broken this support and fallen till here. But again, it's again, it's moving up from here to this point, right? And again, I'm sorry, I'm not able to, yeah, oops. Right now, from this earlier, if it is earlier, what I used to feel is, as soon as this low is broken, this is a clean up move down, and this is definitely a falling trend. This is actually a falling trend, right? But here, do you think that this is a bullish move? Do you really think that this is a bullish move? No, no one would think that this is a bullish move. But actually it is a bullish move. How can you say that? Say, now these are the lows and this is the high. Now if I say this is 1, 2, 3, 4 and 5, right? Now if you try to draw a line, if I try to draw a trend line, I'm connecting all lows here. This is the low, and I'm connecting the highs here. This is the high. Which is more steeper? The fall on the highs is more steeper, but the lows are not. Low is not steeper. It's not steeper, which means here the low of that script is getting limited. The lows of that script is getting limited than, in spite of having the selling pressure, still the low of that script is getting limited. Now generally most of the times, and you know, this generally breaks this trend. This is a trap, brother. Generally this is how the trap works. So this trend line, it oops, you know, the line which is falling from here, this line, it goes and breaks this trend, it comes down. But what happens? You can't take this trade here. You shouldn't take a short trade. Generally earlier I would have I used to give short calls here, and I used to always get into surprise situation why it has moved up again. But this is what it is. It again when it again turns up, you can go short, but with a stop loss of this. Generally this should be the stop loss for you. But here the stock, when it actually goes down and comes back again, when it goes down and comes, I'm sorry man, and the stock goes down and comes back again, I'm sorry, I'm not that good. Okay, when it comes back into the trade, into the zone again, it has deceived us, it has gone out, and when it has came into it, understand that this is a Wolfe Wave. It's so clear, this is a Wolfe Wave. It goes up until which point? Till this point. Why it goes only till this point? This is where it comes. Your target would be, alright, your target would be based on this point. Your target is this. So from 1 to 4 projected, it gives you the target. So from here, when it gives a breakout and when it goes up, it gives a clean indicator that it hits this point again. This is a bullish Wolfe Wave. W, because it's it's into reverse W. So this is a bullish Wolfe Wave, and the reverse of this will be the bearish Wolfe Wave. And someone wants to understand that bearish Wolfe Wave also a little. I'm just finding it a little difficult to draw that. Okay, it's like this. It's during an uptrend. It goes like this. 1, 2, 3. It goes beyond, and when you actually see it, when you try to draw the trend lines, sorry, okay, sorry, excuse me for this time. So So now when it goes it up, and the target would be, this is the trend line. I just have drawn the trend line. It has given the breakout and the price has moved up, and now your target would be this. When the prices come back, they come and hit this leg. So this is what the bearish Wolfe wave is, right? Generally this is what which happens, right? This is the trend. So now for that I'll show you some few examples on the trade also. Now let's take the HDFC yesterday 1 minute chart. Okay, let's take the HDFC 1 minute chart. I have seen it. This works even on a 1 minute candle too. That also it easily works. 1 minute. So this is what. So here is the Wolfe wave. It has gone up, right? It has gone up. So now if I'm trying to draw this line, let me remove all other Bollinger bands, moving average, right? So now if I try to from here, if I try to extend the line, so this is where the line goes into, and these are the lows, and if you try see this, exactly it hits the target and waits to the next decision, right? It has gone up, it has given the breakout, it came down, and until this, until something gets close here, so you give what is that 0.3% of speculation stop loss thing here. So it didn't give the speculation thing, it's just a 1 minute thing. Even that 0.0, this high would be the stop loss generally. This high would be the stop loss, and on this high you have to add 0.3% of speculation thing, where the high is actually 1844.2, where it has gone till 1845.2. So 1 rupee, it's for this stock, it's not, it doesn't come under 0.3 speculation thing. So it has again fallen down, and you have seen this hitting the target. And similarly now I have given the similar call. If you remember, we have taken it on Tata Steel many times. Actually it has worked wonderful on Tata Steel. I don't know why, but actually it really works beautiful on Tata Steel, Wolfe Wave. Yeah, here it is. This is one place, but I remember there is one more other thing also, but I don't. Okay, fine. Anyways, this is one wave. This is and where is the line? High and high. It has given a break, and when it comes back again, and see where it has gone from here till here. It has again, it went into confusion only after. So if you have taken the trade at 611, see the trade, it is 581. So almost like 30 rupees move. And how many days? It's on a single day from 610 till 583. This movement is for sure movement. Generally, if you don't know these Wolfe wave, what we think, generally this could be a support again. Yes, this was a support, but actually when it came here, it has gone up, and again it has this support was not able to give that a complete support for that. right? Because it is going up without filling the orders here, right? At this place it has some orders maybe, or something like that, something, when it doesn't fill these orders and it has gone up without giving a proper support and goes up. So when it comes back, it doesn't find the proper support at this minimum consolidation places, so it will not stand for long, so it has fallen drastically. So now similarly I'll show there is one more mm, bullish wave also. We have taken a bullish, yeah, here it is. This is a bearish Wolfe wave, right? After this there is a bearish Wolfe wave, but actually we have taken bullish exactly after the ending of this bullish. It has started bearish nature again. So now let me remove all these. I'll to show the bullish wave here. Here, if you see it, this is the bullish wave, and this is the sorry, like this, and see see this. So it has broken this, it has gone up and touched this point, and from 586 it has gone up and touched this 606, 586 to 606 again on, it's almost like a BTST. You have taken the trade at 1 second, somewhere yeah, you have taken the trade somewhere around 7th. On 7th you have taken it somewhere at 9:15 in early in the morning, and on the very same day it has on the next day, what, oh no, yeah, after 2 days later, 2 days later, on 7th you have taken, 7th morning you have taken the trade, and on the 8th itself, it has reached this 603, right? On 8th 10:15 means 1 day. In 1 day you got 20,000 rupees. So that's how it goes. So this is Wolfe Wave, a wonderful wave strategy. You can definitely go ahead with this, right? So this is one. And any doubts on this, please? It doesn't, you need not see anything else here. Actually, if you want to see it, generally, at this point you will not be a trend, at this breaking stage. Maybe if you want, you can see this ADX, but still, when it is Wolfe Wave, generally it's almost like nothing is guaranteed though. To be honest, nothing is guaranteed. So it may even come back, and the stop loss would be this. Stop loss would be this point. And as I said, speculation buffer of 0.3%, right? So that. And now let's go ahead and see the weekly how many of you are fine? It's 10 now. Shall we go ahead and discuss one more point also? Mates?
Yes, sir.
Okay. Okay. Wonderful. Yeah, right. Thank you. So now let's look into the 3-point trend line breakout, and this is one which I have taken and I have exited with fear. I'll tell you, but that has worked out absolutely excellent. What is this? Apollo Hospitals. Because I have taken a huge, just because of a deliberate trial, I actually lost huge anyone who does the mistake will be punished in the market. I have done the mistake. I clearly know that I shouldn't be shorting any script which is trading on about 20 DMA, about 20 EMA, exponential moving average. If it is trading about 20 DMA, which is on top of 20 DMA, that script should not be shorted. Mates, don't do this mistake ever in your life. Be it whoever might give you that idea, but do not short any script which is about 20 DMA, which is trading about 20 DMA, and especially when the 20 DMA is above 200 DMA. Do not short that script. TCS, I shorted and I paid. I paid like anything, which I have lost confidence in my own, and again I started regaining it. That's why I was silent for almost like a few days. But now again, definitely very fine now. So I'm again doing this now. So now let's take this from last few days, if you see this, there is a clean trend here. There is a clean trend, right? If you see a daily thing also in Apollo Hospital, you see a clean trend breakout. One, no, it's not this. This 1, 2, 3. If it is a two point trend, it's not a great trade. It's definitely not a great trade. But actually, I didn't see this completely. What I have taken is open is equal to low. I have been following this script since very long, almost like, when I'm seeing this 15 minutes chart, almost like, when I see this somewhere here, I have seen the script somewhere here, and I was waiting to long or short based on the script movement. But somehow, I don't had the guts to go ahead with that like that. But yeah, I'll show it. Just give me a second, please. Yeah, it was completely stagnant, and I was waiting. That's what I was saying. So it's almost like from June, from June 1st, it has fallen a lot. It has fallen a lot, and it is almost like little evident that it might move up only, because seeing these good volumes here when it has fallen down. Again, there are some volumes. It doesn't mean after that if it didn't completely crash down with these volumes, generally it should be a positive volumes only. Again, it started getting consolidated. So almost like 7 days, after 7 days, when it has given me a positive movement, and that too, see it very clearly, that day open is equal to high, sorry, open is equal to low. I have taken the trade here, and I have exactly exited at this point with a complete fear. Not even that, I'm sorry, not even that. Yeah, this point, at this point I have exited 960 from 933 or 935. I have exited somewhere with 960, which means 30 rupees. So 30 rupees, it's not 30 also, right? It's somewhere 25 rupees. 500 is the lot size, so 25, so 12,000 rupees, and I felt it was a wonderful trade. But see what has happened later. So actually, I have been following only the 15 minutes candle, but if you see it here, it has closed on the trend line. Beautiful, it has closed on the trend line. It is worth waiting, and because that too, it is having beautiful volumes here with a very good support, right? This is a very good support. After this, there is a doji. This is actually, it's not really a doji. This is wonderful, something like a morning star pattern, and supported by one more doji, which is closed above. Its low is above this closing. Please see this. Every point in market is very important, mates. It has closed above this close only. No, it's not close. It's open. Wherever it has opened, it has closed above that, and its low, if you see it here, the low is not lower than this. So this is definitely a support. And on top of that, again, see it again, this point, its low is not again below this. So this is a clean uptrend formation here, and since there it has given a very positive move. Only just because I was not having confidence, a similar move, I have checked even the similar move. See this here, if you see this, the similar move from wherever the open is equal to high, it has given a movement from 1010 to, the movement has gone to almost like 110 rupees of movement. It has given 110 rupees of movement, but I was not having guts, because just because of the previous mindset what I was having a defensive mindset, so I couldn't take big risk there. So but see it here, it's a clean 3-point 3-point breakout. When it has given the 3-point breakout, see, that's how it jumps with volumes. So wait for this 3, at least it should be having 3 or anything more than 2 is a beautiful breakout. Don't and just a 2 is also good, but if you are aggressive, you can take such trades. but generally 3 point trades is wonderful trend breakouts, right? So wait for such trend breakouts. It will be really good. Even this, see this is also a wonderful trend breakout this day, right? 1 2 3, right? It's a 3 point trend, so that's why only it has given a beautiful breakouts again. So wait for such good breakouts there, right? And don't go and trade until you're having that. Go with the trend only completely. If you're actually having a downtrend, go with a clean downtrend. Go until you are with the trend. No one can beat you in the market. No one, even market by its own cannot break you. I mean, if it can break you, to break maximum 2 times in 20 times, right? Go with the trend. And now coming back, so this is one point, that is one example. 3 point trend line breakout. Should I have to see all of this? Yes, you have to see all of this. For that, how can I make out, how will I be able to identify all these, brothers? You have to spend. Now let me tell you, if someone is having 1 lakh rupees of salary, 22 days, divide that 22 days of work, our IT works, with that 1 lakh rupees, you will be having hardly not even 5,000 rupees. When you are expecting, and for remember, please respect the market. For earning these 5,000 rupees per day, you have spent 16 years of education. You have at least 5 to 6 years of experience. You have spent at least few lakhs of rupees in some of your not only 16 years of education, you have spent lakhs of rupees on your education. After spending all these, you are earning less than 5,000 rupees a day. When you are expecting more than 10,000 rupees from the market, tell me what all you have to give. You have to work hard. It's like, I really felt, than Pi or than any other tools, I really find Trade Tiger tool as excellent. I'm not what is that, giving any positive feedback about Sher Khan, and not, this is not that sort, but this is the tool which you will be getting as free for Sher Khan. So I'm just letting you know that you can actually use this karke, and nothing more than that. So this is one excellent tool which is coming free for you, right? Just give me a second, please. I forgot almost, man, because I have man. Is it right? No, it's wrong. Sorry, mates. Sorry. Fine. Anyways, in the next session, but it takes some time. I don't want to make you wait. I'm sorry. Can you guys wait? I'll just quickly, the prices will be, the prices will be clearly visible on that. So what I'm trying to say it is, just put that 70 scripts in a book. Okay, in book, in the sense, in the Trade Tiger book. I'll show it how to create that book, and I'll share the video again on our group again, right? So so just maintain that book, and every day just click next. So it's like, it doesn't really take one chart 1 minute. Definitely will not be taken, unless until you're working on that chart. You're going to, if you find that chart interesting, unless until that happens, you will not spend at least 30 seconds also on that stock, on that script. You will just simply pass on. So what I mean to say is, so try to maintain that, and try to make use of the technology as much as possible. Right now, we are still having 13 minutes. Let me just take on one more easy one, which is which is this breaking 20 DMA or 50 DMA thing. So that you can actually create a some scanners also, not on may not be on Trade Tiger. Trade Tiger, you will not be able to create any scanner like that. You will not be able to customize the scanner, but you can do it on Zerodha Pi, right? So here what I wanted to show it is, so just add, understand the importance of averages. Earlier, when someone is telling me buy a stock, or sorry, sell a stock as soon as it cuts the 20 DMA. Arey, why? It's just a number. 20 DMA is just a number. 20 days moving average, right? When it is cutting that number, why should I actually sell it? When I know that script is strong, why should I sell it? No, don't be so stubborn. It means 20 DMA means 20 days moving average. What does it mean? It means that the buyers from the buyers or the sellers from the last 20 days, 20 days in the sense 22 days, approximately 22 days, right? Which means 1 month. From last 1 month, that is the average price someone have bought, and which means more people have bought or sold exactly at that price, which means the emotions would work on that price. That is the point where the emotions would start, the real emotions would start working. Example, we are 10 members here. Okay, now we all wanted to buy a stock. In this 1 month, we didn't had that, we didn't communicate. The stock has moved up and down and whatever it is. So we 10 members have bought it, right? Let us assume that we are stock movers or whatever it is. Now, if I alone, I bought it somewhere on top. Okay, I will exit on top only because the price is actually falling down below my bought price, that is falling down below my bought price. I got panic and I have started selling it. I started selling it in the very beginning because I have bought it somewhere at very high, right? So fine. Similarly, that is only 1 out of 10. But on an average, maybe 5 members of our 10 members have bought it somewhere at a point. Say example, I bought it 100 rupees. The price is actually moved from 90 rupees to 100 rupees. Total 90 rupees to 100 rupees. Now, the average price, let us take 95 rupees, right? Someone, when I, my 100 rupees price is actually got crossed, and when it is falling down, I got panic and sold it off. But when 95 rupees, that average is actually being hit, okay, that 30 days move, 1 month bought price, 1 month people's bought price is getting affected, then more the number of that average, the more the number is average that we are speaking, that we are talking of, we are seeing at, then more will be the number of people who are getting affected by the price move, right? Am I able to communicate it well? When that price is getting affected, more will be the number of the people who will be thinking about it, who will be seeing at that script that is falling down below your average. The average number of people will be more because it is the average of that complete 30 days. Did you get what I'm trying to say? Am I successful in making you understand that price 20-day moving average is the average of the total 30 days price movement? So if the stock is falling below the 20-day moving average, which means there are more at that average price, you will be having more number of members who have operated with that price. So more will be the number, more will be the movement. So if I alone get panic, that will not be sufficient. The average of our 5 members, if the 5 members in our total 10 members got affected, then the movement will be higher, then the panic will be higher. or then the greed will be higher. Okay, now so unless until that, when that price is falling below 20-day moving average, that will push the weaker hands into panic. Who are weaker hands? It's we are the weaker hands. Generally we go into panic, right? If it is 50-day moving average, which means 2 months, a person who is holding the stock for 2 months, he is definitely a stronger hand than us. A person who is having 200-day moving average means his price is somewhere around 200-day moving average, which means 1 year. When a person is actually holding a stock for 1 year and your stock is falling down below that, he knows how to bring it up again, because it will not, you can't make any script fall below 200-day moving average that easily unless until there is a clean fundamental reason. When a stock is below 200-day moving average, stop chasing it. This is what I learned. This is going behind the penny scripts, going behind the stupid scripts. This is what we learn. So don't buy any stock which is trading below 200-day moving average. Don't keep expecting a turnaround. Just because we bought it, we can't make that script work well for us. Just because we bought it. So now, anyways, fine. So that's what the moving averages play very important role, and at as part of that, please let me tell you one wonderful simple technique yet no one follows. I will tell you a wonderful, very very simple technique for not getting losses in your investment. At least if you are looking for investments, then you will not get loss at all. I'll show it on the screen. You'll understand. Yes, if we follow this, we will not get loss. Just give me a second. I'll show you. Easy. Everyone would have already know this, but still, let me just show it. 200-day exponential moving average. This is red, and then again study says moving average. It says 50. Go with done. Simple moving, again exponential moving average. Go with 20. And one more, which is 100. This is where emotions play. I'm sorry.
Brother?
Yeah, brother.
Your screen is not changing. Yeah, now it works. Yeah.
Okay.
Yes. It is working.
Okay. Sorry. Yeah. So now these are the moving averages, mates. So here, okay, when the stock has actually moved up, this is let me just take a clean example. Yeah. Again, cutting.
Actually, we lost a few minutes of your video. Can you just yes? Can you just show us after the 200 EMA what all the moving averages you have?
Oh, really? Okay, brother. It's 200-day moving average, 100-day moving average, 50-day and 20-day. It's only moving averages and nothing else. I added nothing, absolutely nothing. So if you have selected a good script, right? Let us take investment scripts, right? So let's take Trident. Trident is one of my favorite stock, but still, see, it clearly says when you have to enter, when you have to exit. See, you have to take the trade. When the stock has moved up and trading only above all these 4 moving averages. Only when it is trading above all these 4 moving averages. Now see it here. It has moved up here. when it as soon, and sell it even if you are in losses, sell it if it is closing below 100-day moving average, and buy it after it has moved up again. So that has happened. Say example, it has moved up here, 100-day moving average, it didn't close it here, so you're still carrying your positions here. It went up, it touched the 100-day moving average, it moved up, it didn't close here also, it closed here. So you are in the trade from 57 rupees till 74 rupees, which means whenever the trend is driving, you are obviously in that. How many days it took, brothers? It is in 2016, right? It is just in 2016 in the month of December. It has happened in the month of December. It has moved up the total, all of this, and it has started moving up. Now, in the month of April 2017, you came out. 4 months, you were there in that script 4 months, and you got 50% returns. Okay, now again take the trade. This is let us assume losses also. Okay, you have again taken the trade here. Okay, you have taken the trade here. It has moved up and it has closed below 100-day moving average at 91. You have taken the trade here, 83 rupees, 91. You waited, you lost the best price, but you didn't lose your money. And you buy only when here it has moved up. Maybe you have bought here. Chalo, let us assume that you have bought here. It fell down. How many rupees, brother? 91 rupees. You bought it and you sold it at 89 rupees or 88 rupees or 85 rupees, 6 rupees. Let it go. And it didn't come again. You are not part of a big loss, at least. You are not part of a big loss. So, indicators will give you when you have to enter, when you have to exit. It is we who will go with gut feelings. So let's not go with that gut feelings. 100-day moving average is such a wonderful script and it's such a wonderful indicator which actually clearly acts as a stop loss thing. Okay, and trading above all these four, because when I'm actually taking 100-day as my stop loss, why shouldn't I take 100-day moving average itself as my entry point? Can someone just asking, just to make it interactive, I'm asking, can someone tell me this? When I'm having 100-day moving, as soon as something gets below 100-day moving average, if I have to sell it, why going above 100 moving average is not buying?
Maybe it's not the confirmation point.
Yeah, and exactly as you said, it's not the confirmation point because 20-day, something trading above 20-day, it means momentum. We don't want to be in that stock for a longer span. Example, brother, say example, if something didn't go below 100-day moving average to the complete period from this period to this period, still, did you achieve something here? No, you didn't, because that is not in the momentum at all. The momentum will be confirmed only when the price has crossed all the 200, 100, 50 and 20-day. All these three, when it crosses all these four, then 100-day confirms a stronger hands in the market are in the script. It just confirms only that. That alone will not be sufficient. To be smarter, if you feel that your money should make more out of it, then you have to catch the momentum. Be in the trade. Example, I bought it. I bought a script at 80 rupees and sold it at 100 rupees. You bought a script at 90 rupees, sold it at 100 rupees. Who is great? Example, it looks like I am great. If I tell only this point, 80 and 100, 90 and 100, it looks like I am great. But I bought it 5 years back. You bought it 1 year back. Who is great? You are great. Which means you understood the momentum, you encased the moment, that movement. In 1 year you made 10 rupees, in 5 years I made 20 rupees. How does it make a difference? It does. Sorry. How does that make sense? Mine doesn't make sense. So investment now became very difficult because there are many shell companies coming out. They are prepared. They are well prepared. They are having better, channels to cheat us, to give wrong, to show the wrong fundamentals, to show wrong momentum. They are operators to show the volumes. Have you ever seen, there is a stupid script I would have shown, I think there is, okay, the script name itself is Dalal Street or something like that. Trust me mates, trust me, honestly, I don't know if I can still find it. That used to be my lovely and wonderful example. Dalal, lovely, it should be here. Okay, and it's you should see this. You should see this. This is wonderful chat. You should see this. Because you should know what is going around in the markets, right? I forgot how to see the chats on. Can someone help me? May, the month of May. I'm sorry. See the script? Have you seen the script? It's from 13 rupees. Mates, see this, 28 rupees in 2006 has gone till 11,000 rupees. 11,000 rupees. Now it is at 129 rupees. Tell me, it's like, what should we tell on this? It's like, so, they are with a clear intention of cheating the investors. When someone starts a company, when someone lists a company, when someone started giving, see this, how many years he is in the market. He didn't come today and went the next day. He came in the month in 2006, and he is in the market even till date. So that's what. So these are all operated scripts. You should understand, just because some scripts are actually being shown on that, it shouldn't, we shouldn't fall into that pitfalls. You should be able to understand that whether it is having a genuine buying or not, right? So Trident is one such good stock. Lincoln Pharma is one of the wonderful stocks. So it's like, you should understand whether the quality is buying happening in that or not. How you will understand? See, as I said, there is no shortcut. You have to see number of charts. Than understanding the fundamentals today, it's easy to understand the technicals for sure. That someone who is Deloitte, he's there for 1%. Now see, Deloitte is all, what happened all these years? What happened to that? He is a good company. Then what happened? Why didn't he mention all these things before? If something is that wrong, why did he sign it all these years? In 1 year he came out, just for 1 year, in the final quarter results, he just came out. So no authority, no, it could be ICA, ICWA, no one helps you, brother, except our own selves. And for that, only the price can show you the real movement of a stock. Now see that, again this. Even if you are in loss, in 1%, See this stock, it has this is a manipulated move. How to understand that? I can't, seeing that stock, to be really frank, I'm a little able to understand that, but how, if you ask me how you are able to get it, I'm not able to explain it well. The movement of the stocks, it's an operated move. See the average trade which is happening here. There is a indicator called average volumes. So someone is continuously trying to average, they are actually trying to put the movement, they are trying to show the movement. The average, have you seen the average stocks that are getting traded? It is being operated, it was actually being cleanly operated, and suddenly see what has happened. Disaster. Anyways, fine, this is what it is. On the very, in the, here at this point itself, we should have, there are no slips, of course. Even when something is in LC, I understand that you had no choice except to wait until the script opens. At least you would have came out here if we were not greedy. When something came down, only greedy people will think that okay, it would spike back, let us encash it karke. Only greedy people, that's it's not greedy, but yeah, we fall into that. That's why, see how many stocks have been traded that day. 7 millions of 70 lakhs trades, 70 lakh stocks have been traded on a single day. So that's how, but has it gone up? Now see. So that's what, so don't fall into those. Respect these averages enough. Respect these averages, right? And anything that, when something is, like this, that's not. So what all we have covered? Yeah, 20-day moving average. Yeah, this is again 20-day moving average and 50-day moving average would work excellent for intraday trading as well. When something is closing below 20-day moving average, you have all rights, you have all liberty to think of shorting, blindly short. But when I say blindly short, again conditions apply. You have to look for the levels. You definitely have to look for the levels. You have to look for the momentum. You have to wait. That's what I mean to say. So but below 20-day moving average, it is a shorting candidate. It is qualified for getting shorted. Above, when it has crossed 50 moving average and closed above 50 moving average, it is qualified for going long, right? So this is what, these are the points today. So it's 10:40 now, so let's wind up the session here. So we have covered 1, 2, 3 and 4 strategies. 4 are really good strategies. You can actually believe on them, and with a single strategy you can actually get good calls. You can actually create good calls. You follow that, it will happen good. Everything will happen very well. So but if you are actually trying to get the knowledge in multiple other strategies, generally you'll get into confusions, mates. So try to master 1, 2 or 3 strategies maximum. Don't go into anything more than that. With these 3 strategies, you can make at least 3 trades also. In a single day, you'll get 3 trades if you follow any of these 3 strategies. That's what. Okay, so this is it from my side, and so let's wind up, shall we?
One question.
Yeah, please go ahead.
Talked about 20 DMA and 50 DMA for intraday, right?
Correct.
So if we are following that rule, which chart we have to watch? Is it 15 minutes or 30?
No, sir. It's not no. It's you have to look for daily chart. After looking the daily chart, it has to close below 20-day moving average on the previous day. Then that script is qualified for shorting today.
Okay, so we have to continue the trade for trade for more days.
Yes, sir. I mean to say example. Yeah, let me just show you a better example. Just give me a second. Yeah, this is a 20-day moving average. Right? This is 20-day moving average. It has gone up. It didn't close below this. It didn't close below 20-day moving average. It didn't close below 20-day moving average. This is the place where it has closed below 20-day moving average. See the crash. And here, next again it has moved up. Don't go long. Here again it has closed 20-day 20-day moving average here. Next day take a trade. It has gone up. Wait, it has fallen down again. You'll make profits, but here as I said, you'll always be having a pitfalls. It's not pitfall. You'll be having a stop loss also. I don't say every time this works. Here it has closed below that, but after closing below, you have to take the trade only below that. If the stock is trading below this candle, only then take a trade. Only then take a trade. It has actually reversed and gone up. Now take say it here. This also, see, you can't simply short it because the previous low has to break. But see here, it has closed below the 20-day moving average. Next day it has started trading below that. Short it. It has gone till 1152, almost like 499, which means 15 rupees movement. So similarly, it has closed this day. Next day, when it starts falling below this candle, you will short. Wait, and again, market will respect that. It has to fall down subsequently at least, but you have to wait with your own stop losses. Stop loss would be the same closing basis. If it closes above the 20-day moving average, that's it. That move is negated. Now you see it. I'm not saying anything. You see it. Here this is again a 20-day moving average. So let me just show it again. Here, if I'm removing all the studies except 20-day moving average. Yeah, now see this. It has closed below that. Next day, don't take a trade because it didn't close. It didn't go below that level. But the next day, when it has gone below the level, see the movement. And same again. This has similar move. See this. When it is crossing below this point, short it. See what has happened. Same point, short it. See what has happened. Closed and it has moved up and it didn't move up. It never went up and closed above that. So this is not closing below the candle. So until this point, even this is also not. Here. Okay. Again, it has gone up. It has closed. This point has closed below that. It didn't close up. You have shorted here at this point. You get. But again, as I said, try to make. Don't be extra. We shouldn't until we don't expect so much from it. That's actually sufficient. This a 2-day movement, whatever it is, just capture the 2-day movement here. See it again. It has closed here. Don't take the trade. This one you don't take the trade here because it didn't go below that. This candle didn't go below the previous candle, right? You have to wait. The next day it has gone below. See the crash. See the crash. So it's like that's all. That's how it happens, sir. Right? So actually 20-day itself actually would be sufficient, and for that, if you add the 200-day moving average, it gives you wonderful confidence, because if you add the 20-day move, if wherever the 200-day, if you add the when you add the 200-day moving average, if the 20-day moving average is below 200-day moving average, that gives wonderful strength. When 20-day moving average is below this 200-day moving average, after closing below the 20-day moving average, the crash will be intense. Now you see it here. Yeah, of course. Now it worked because it has crossed both the 20-day moving average and the 200-day moving average also here. That's why maybe you are seeing a little this thing here, but actually this intense crashing you will not see if the 20-day moving average is trading is actually above the 200-day moving average. But if it is below that, that works beautiful, right? So any other questions, mates? Any other questions, please? No? So shall we wind up for the day? Yeah. Okay. Yeah.
I have one question, sir.
Yeah.
Okay,
Your name,
if
please,
I wa
brother.
if I watch,
PNR.
yeah,
Okay.
if
Yeah.
I
Yes, sir.
watch
Yes,
the
sir.
money control or any,
Okay.
if I watch the any money control website or TV, somebody will say sell the stock
Yes,
for
sir.
some price.
Yes.
Within the 3 days, some analyst will say buy this one.
Yes,
Will
yes,
they
sir.
follow this fundamental? Whether they will give the oral communication to do the big business in the
Obvious, sir.
back end story.
No. You as you already mentioned. You know, sir. One thing. If everything goes wrong, no one will believe them. So out of
Yes.
4 scripts, they will definitely see that, but they know the psychology of people. They will focus something which is actually, why, sir? Why, sir? Analysts have given a sell call on SBI when SBI actually gave worst results. It has
Yes.
already fallen down so much, right? But
Yep.
I have groups who have longed on SBI. So
Yeah.
that's what, when people like these people who are on my WhatsApp group have know that they have to go long. How do we expect that the people who is coming on TV don't know it? So they know it, but they do it.
Okay.
It's only for business, sir. So don't actually, when we know these, you really need not follow those.
Okay.
Please don't
Okay,
follow
sir.
those. My recommendation is that. Yeah.
Sure. Sure. Thanks. Thanks. Thanks for your
Thank you,
message.
brother. Thanks a lot. Okay, mates. Bye for the day, and yeah, thank you. And do let me know, even if it is personally or on the group. I really don't mind. Please, if you feel that there are any corrections or improvements, please point it out. I will definitely try to make it better. Right? Thank you. Thanks again.
Okay.
Bye,
Okay.
everybody.
Thank you.
Hey, thank you so
Thanks.
much, brother.
Thanks a lot, mates. Thank you.
Thank you, sir.
Thank you, bro.
Thank you, brothers. Bye.